So, good morning, everyone, and very much welcome to Flash Friday. My name is Ginsel. I'll be your host for today. And like every Friday, I'll be taking you through the latest developments in the world of fintech, looking a bit ahead to our newsletter, of course, that goes out every Friday afternoon about global fintech news. I always try to find someone from the market who can enlighten us and tell us a bit more about the developments behind the scenes. And today I'm really honored to have Rajul Mittal with me, Head of Sustainable Finance at Synechron. Hi, Rajul, how are you doing?
Hi, good morning, everybody, and good morning, Dawn, once more. Thanks for having me, and it's a pleasure to share our thoughts and see what's happening in the industry, and particularly to sustainable finance and ESG as a topic.
Yeah. No, I think it's really great that we can talk about this. I think it's a very hot topic. We could say. Given the attention that is getting not just in public media, but also from the regulators these days. And so I see that we've got quite a series of events that we evolve around this. Like we had a roundtable last Wednesday to talk about this with Ellen Overy and Compender. And actually, we're also looking ahead to do an event on the 3rd of December together with you, Rajul, which is also, I think, really nice. Nice to give everyone a bit of an update and see where we stand with regards to sustainability. But maybe first start with you and your role. Can you tell a little bit about what you do and where Synechron is mostly active at the moment?
I think thanks for that, Dawn. So I've been with Synechron for almost 11 years now. So I did my MBA from Nairobi and then immediately after that joined Synechron. Have been busy within the capital markets, have worked at almost all the major, financial institutions within the Netherlands, the bigger ones. Mm-hmm. And for the last couple of years, we at Synechron have been, busy with sustainable finance, which is an overarching topic. And, I think generally everybody is a little bit wondering as to, what is the link between sustainable finance and ESG on one side and the regulation on the other side. But the way I see it is that, sustainability is a larger topic that has been around for, more than a couple of decades. It kind of came to the limelight with Al Gore losing the election and becoming a climate change champion. And in the last 5 to 7 years, what you see is that within sustainability, sustainable finance as a topic has gained quite some prominence. And to break it down further, within sustainable finance, you have the regulatory part on one side that has to do with EU taxonomy, SFDR that are coming into force in the next, 2021 and 22. And on the other side, the evolution of ESG, environmental, social, and governance considerations when you look at investments. So that's how I see at a very high level.
Because that's quite interesting, because I do know that a lot of people think that sustainability has mostly to do with the environment and climate change, but we're actually looking at a much broader perspective, right?
Indeed. And so I think environment has been at the fore of all this. That has to do with climate change and what we see in terms of sudden changes, in the climate patterns, the sea levels rising. And that had quite some attention for quite a while, and especially Donald Trump pulling out of the Paris Agreement. So it got the attention that is required. Are we doing enough? That is anybody's guess. But I would say that COVID has been pretty good in terms of bringing the social part of ESG to the prominence. So in the US, you have...
In what way?
In the US, you had all these, George Floyd dying, a lot of talks about racism and things like that. And then immediately following that, you saw a lot of companies jumping on the bandwagon of philanthropy. Like positive action and, what we should do for minorities and, African Americans. Yeah.
But that's actually highly driven by social activism from citizens, right? So I think you see that people are, I think in this case, it was a real social problem, what we saw in America that sparked Black Lives Matters and these kind of movements. But I think you see that actually the consumer or the citizens become much more voiced and have much more insights in what's happening, and they start responding to it, giving a big push towards businesses to actually change and adapt.
No, I would completely agree with that. And what you also see in a lot of studies, that especially the millennials, are much more conscious in terms of what's happening in their surrounding, not only environment, but also socially, the social factor. And that's why you see that companies or the corporates, either they do it proactively, some of them have that embedded in their DNA, and others are forced to, follow this journey. So that's what you see.
Yeah. And so do you see, as you advise a lot of companies, do you see, you probably see companies behaving differently, responding differently to these kind of challenges. I think some might be really inclined to basically wait for regulations and to want to comply with that. Others might be really have a much more stronger sense of their social profile and want to do something about it. Of course, marketing always plays a role in this as well. How do you see that?
I think there are quite some parallels, if I think out loud, with the whole CSR thing. So I think in early 2000 and even till 2015, CSR was at the forefront of what good as a company you can do to the society. But many a times it was like CSR washing, like we call greenwashing.
Exactly.
Similarly, CSR washing, that okay, I would allocate this and this, and I will do this and this in the calendar year, and I'm good enough. I think with ESG, sustainable finance, and another UN SDGs, the Sustainable Development Goals, all this put together, I think we are embarking on a movement. Are we doing it at the pace at which it is required? That only time will tell. But I do see a concerted effort from the companies that we engage with. We also, engage with our customers, our employees, and people I work with. So everybody has that as part of their consciousness, as a bigger topic. And
yeah. So would it actually have to do also with the discussions we're seeing increasingly about purpose? Right, so I think as you let's say people are expecting companies and businesses to have a certain soul and a certain reason of being, and I think that's where also I think a lot of these discussions about ESG find their place, right?
Well, indeed, and I think you get it spot on. So earlier this year, I finished a course from Rotterdam School of Management on sustainable finance, and they put it very very succinctly that initially the business of business was business, so it's only about shareholder value that mattered. Slowly we are moving towards, say, finance 2.0, where along with the financial value, we're also looking at more the integrated value, what you do towards the society and the environment. And do you have a negative footprint when it comes to environment? Still, financial considerations are leading. And personally, I believe they will always be leading unless we see some kind of catastrophic event that that changes the way we live. It could be, a meteor coming in, or sea levels rising by 1 meter. In that case, I think our very existence would be questioned, and then the transition will be faster. But I think we are slowly and gradually moving towards, say, sustainable finance or finance 2.0, where we look at the integrated value.
Yeah, don't you think that also perhaps we need, right? So there's, of course, if we move that way through transparency, that's nice, but it also could still be, let's say, it's still you only talk about what you know, right? So then there might be still an incentive to actually do the bad thing unless you are certain that it will be known, so to say, right? So that's sort of the game that might be played if the capital in the end would still be the foremost reason of doing things. Shouldn't it actually get a system change before we really can see a big change there, or is it something that you really believe that that despite the capitalist system, we are able to create this ESG soul within that actually drives things from a more holistic perspective and more social towards the environment and society?
Very good question, and I think we need to look at it from different angles. So one is that responsible investing or impact investing or ESG has been around for quite a while. In the literature, you even find in 1969 certain funds in US which kind of eliminated sectors like weapons, oil, tobacco, things like that. So initially it was all about not doing bad. Slowly we are transitioning towards not only doing not bad, but not leaving any negative footprint. Plus doing good. Your supply chain should take care of workers in India or Bangladesh, that they are able to have a decent lifestyle. So that transition is happening. Secondly, what you see is that, and I think everybody around can concur, that information is flowing so fast that you cannot hide for capital considerations. Even if you do something in Mozambique as a company, it would come out, and that gets reflected in the ESG score that you have or the controversy score that you have. The flip side of this is that ESG is still what you see only gets updated once or twice, the ESG score. So it's not real time. It's not even close to real time. And my guess is that by 2025 or 27, we would have ESG closely following, say, the financial performance of consideration. So we will have a more real-time update of ESG, and then the companies even are forced to, take it more seriously, not only the capital.
But would you expect that, for example, financial considerations need to be put in play there, like we, for example, do with carbon dioxide pricing? Because that could be one thing. Just one word that just popped into my mind, which I think is interesting in this perspective, that might still be very relevant, is especially if you watched House of Cards on Netflix, you might be familiar with plausible deniability.
Yeah.
It's a really political term, of course, but it plays an important role, I think, also in these kind of responsibilities and the way that people talk about this. Because sometimes we make the mistake of looking back with today's social values and looking back and not understanding why something happened earlier, while, of course, things were different at that point. I'm just really curious how sort of the thinking around this will evolve. Just like when we're now still putting, complete seas full with windmills. Yeah. Well, I believe actually that probably in 50 years we'll be taking them down because we actually found something else which is much better to invest in.
But I think that's the course of development, and by mentioning House of Cards, you bring a smile to my face. It used to be one of my favorite television series till, say, the season 3 and 4. But coming back to plausible deniability, I think for us to aim or think that we can really have an egalitarian or utopian society with a perfect framework where nothing will fall through the cracks is, at least in my understanding, wishful thinking. I do see this topic evolving. It was evolving in US till Donald Trump came in, and probably with Biden becoming the president, it will again come back to to the limelight. But I think there is already, because it's not a regulation per se, so there are a lot of smaller regulations and also within the realm of sustainable finance.
Yeah.
But the whole revolution of sustainable finance, including ESG, is more of an evolution with client demanding, what is happening. And, if millennials get in the next 20, 30 years, the wealth that, is currently with, people like us who are not millennials, you would see that companies are forced to do that. And also, again, coming back to the information symmetry, there will, of course, be, for example, the example you gave about the windmills, and I have solar panels on my roof, so it could be that we find something better we are able to harness the tidal power or God knows what. But I do see that we are at least taking good baby steps, know. And what will happen in 7 or 10 years or 15 years time, that's anybody's guess.
I fully agree. So it feels like it's still really early, but I'm also glad that we're seeing some traction. I mean, if you would go to a bit more utopian view on this, it could be really as any kind of economic activity, really taking care of the full value chain from anywhere that they would draw resources to up to basically everyone that they supply to, becomes one integrated ecosystem that gets cared for as well, or at least we find a way to govern that properly. So that could be really, I think it could be really interesting. And let's say the potential of technology, I think, to harvest energy and to, basically to distribute water, energy, clean sanitation, electricity, and so on to everyone. I think that should not be the problem. If we put our minds and money to work, I think that's definitely feasible. But then again, it's probably, wealth doesn't distribute itself by itself, and that's, I think, where the challenge lies.
To this mix, I would introduce the angle of India and China. So 40% of the population of this planet lives between these two countries, and I come from India. And I can tell you that sustainable finance as a topic, or ESG, or social impact investments, that is not even in the infancy. And that is where you see that every year more and more billionaires are, coming to the front. So I think if we really have to have a meaningful change in terms of, we as a planet, I think we need to engage India and China on this topic. And of course, capital flows from the Western world into companies in India and China. But we should not make the same mistake we did, with the whole pollution of Industrial Revolution, which US and Western Europe are largely to blame for. But if we have decided that this is the time to act, it is in everybody's interest that we do take developing countries. China is almost developed into the fold, and take the right steps. Otherwise, it's too little, too late.
No, I fully agree, and that's why I think it should not be. Let's say in several cases, it actually ends up in being almost like a moral discussion. Where I think indeed, especially Europe and the US, who have harvested most of the wealth over the past century, should not say something about how it should be done, because basically the developing nations still have 100 years of credit to screw it up before they're at equal foot, right? So that definitely requires help and collaboration, I think, to actually come to a sustainable development, rather than just going through the same trajectory as the Western countries did. And so how do you see that evolving, let's say, from a political angle? I think it's interesting, of course, to see now that, with potentially Trump leaving the White House, or perhaps the US having to build another White House where Biden can go into because Trump won't leave. But so, that could have a big impact if they would rejoin the climate agreement again, the Paris Agreement. And you see, of course, I think quite hopeful discussions with people that are really, let's say, on a political level, picking this up, as well as beginning to really understand what they need to do to do better, and also be a bit more critical, perhaps, towards, what's really the best way forward, and keep on learning there. How do you see that?
I think definitely Biden, in all the sound bites that he has given so far, and also Kamala Harris, have shown their intention to come back to the fold of Paris Agreement. So that's definitely a welcome step. I think Canada is already kind of leading the movement, so they are at the forefront. Within the European Union, you see a lot of regulatory, initiatives coming to the fore. And generally, within Europe, if you look at the history, it's generally top down. And so Europe works best when there is regulation. We should only be careful not to put too much too fast, because from 2008 onwards, since we had the crisis, I think especially banks, our clients, have been hit with regulations left, right, and center. So we should take some lessons from that, and be careful in terms of the politics and also the negotiations of the super body, that not too much regulation is thrust on these financial institutions. It should evolve. And also we should take a cue from sustainability as a topic. So if something has to be sustainable, not for next 10 years, 20 years, but for the time to come, it has to evolve. You cannot force something on somebody. You need to provide the framework, the guideline, but you need to give a natural time, for it to become mature. And I have a very good parallel with, say, on a very different topic, augmented reality. So we have the Microsoft HoloLens, you had the Magic Leap, Facebook and Apple working on it, and they put billions and billions into that. But you need time for things to mature. So it doesn't mean that you put 100 top scientists in 3 months and you have a new product. It doesn't work like that.
No, I agree.
So I think with Biden coming into the White House, hopefully Europe having regulation, and if we are able to also engage China and India in the right manner, I think it's the need of the hour. But at the same time, we can, I think we can establish and we can also achieve, say, our climate change targets, our other SNG considerations that have been written down, and also all the 17 principles of the UN Sustainable Development Goals.
Mm-hmm. I agree there. I think it definitely. I really think that our thinking about sustainability needs to mature as well, right? So I think we're still trying to come up with a quick fix, like, okay, just reduce carbon dioxide and then it's solved. But of course, it's not solved when we've reduced carbon dioxide, because we have a bigger footprint on Earth than just carbon dioxide, and so there's more to solve. But it's sometimes hard to embrace the full complexity. And to come up with a good solution, and sometimes therefore simplicity helps to, I think, get it on the agenda and make progress. So that's why, even as an engineer, where I'm knowing that there's carbon dioxide might be the least of our problems, I'm still happy that we're making progress there, because at least it makes sure that we do something, right?
Indeed, and I think if I can bring in a very small example, so like living in Netherlands, things seem perfect. You can segregate your garbage. Many people can take bicycle. It's the air is clean. But if I look at the amount of garbage I produce in 1 week's time because of all the packaging, my mom would not produce that amount of garbage in 1 month in India.
Exactly. Yeah.
And that garbage in turn has a carbon footprint. I'm sure about it. Yeah. Why the cucumber needs to be in a plastic? I still don't understand.
Yeah.
So I think the topic is quite far-reaching, and we can really bring about change in a more sustainable manner if we all are intrinsically motivated to bring about the change.
Yeah. And so, what do you think about the role of the financial industry in this perspective? Right. So, I think very often, as a lot of economic activity gets financed through financial institutions. So it seems like a really natural agent to support also these kind of policy ideas that there are, or potentially from a more intrinsic, purpose-driven value to just say, as a financial institution, we want to do good or finance just good projects. What's your view on that, and how do you think that will evolve?
I think definitely what we are doing within the realm of sustainable finance as a society. So what we are trying to establish is that most of the wealth, at least, is channeled through the financial institutions. Either they have it or they channel somebody else's wealth. If we are able to engage financial institutions in the right manner, including, say, ES and G considerations, I think the shift that we need in terms of sustainability, climate change, and things like that, that would be a little bit faster. And I think financial institutions definitely play a critical role, in all on this thing, in the shift. And we already see with our engagement with the clients in the US, or at least in the Netherlands, that almost all of them have noticed the topic. They are definitely working towards complying with, say, the regulatory change that is required in 2020, 21, 22, be it related to taxonomy or SFDR. And thirdly, they all understand that they should not be left behind in terms of the ESG bandwagon. So the industry at large is moving. So if they do not, provide the facility to their investors to look at investments through the lens of ESG, their competitor will do that. And so there is also a loss of opportunity or business for them. So from that particular angle, I think financial institutions have and will play a very critical and important role in this regard.
Yeah. And so do you, I think that they definitely should, but I think what's definitely also interesting to explore is whether this should be intrinsically motivated and encouraged, or whether it should be regulated, right? So I know that, for example, there's quite some topics where the society relies on banks to reduce fraud, fight money laundering, keep infrastructure secure. In how far do you think sustainable finance should go from that perspective to be a force that through financial services, basically, we try to impose, or impose might not be the right word, but to stimulate sustainability towards in other industries as well?
I think I believe in the philosophy that all of us, even though we are intrinsically motivated, need some nudge. Just the little push over the top that is required, and that is exactly what these initiatives, regulations, guidelines, or being a signatory to principles of responsible investing, all this does. The only point I'm trying to drive is it should not be too fast, because there is a conventional wisdom how money should flow, where the money should go to, where the capital should go to. And that wisdom has been, acquired over last, say, 200 years. In 5 years, you cannot change how a person thinks about money. That would be turning the whole financial system, upside down. So regulation does play a very important and critical role. I think you're already seeing as part of these regulations, initiative, guidelines. But at the same time, we need to be a little bit cautious.
No, it's a bit also in line with, we saw a letter from Jens Weidmann, the chief of the Deutsche Bundesbank, also writing about this week. Also to be careful to not be too discriminatory towards certain industries. And I think that's one of the things that I always try to keep a lookout for, is that, let's say, as the boundaries of the financial industry are slowly fading away and allowing for much more different kinds of parties to be interacting with financial services, it becomes pretty hard to point out the right institutions to get a certain mandate for this or not. And I think that's where potentially there's a risk that you actually, for example, if Europe would play this role through their financial institutions, they might actually hamper their role on the global scale, where they have a different competitive field.
I think we can have different examples. For example, if US, we already discussed that generally it works top down within US. We can see how it unfolds in the next 3 to 5 years. Then we take US as an example, where it's more evolutionary. And, within 5 years down, we sit all around the table and take the best of both the worlds, and come up with a perfect system.
If it only would be that rational, it would be great. I would love to have that discussion there. Yeah. No, so I agree. So indeed, I think it's definitely something. But this is also what I mean, is that we still have a lot to learn, I think, in how to set this up, and it requires a real multi-stakeholder approach, I think, to come with good ideas at the table and figure out how to how to nudge society at large and the economy in the right direction. Yeah,
indeed. Yeah.
I think we're already running out of time, Rajul. So, but I really was having a lot of fun talking to you. It would, in any case, be good to remind people that you're going to be present also in the event on the 3rd of December, I presume?
Yeah, indeed, yes.
Yeah, so that will be a good one if you would want to join as one of our members to join the discussion there on sustainable finance and bring it to the next level. I think that's definitely a nice one to invite you to. And for now, thank you very much for joining me. It's really been insightful to have this discussion to my end.
Thanks, Don, for having me, and thanks, Holland FinTech as well. I think it was a pleasure talking to you, and we could have talked for hours on this topic.
For sure. So, but from that perspective, I'm really glad that we got something else planned as well. So, so we could actually take this discussion to the next level and hopefully solve some of the challenges and opportunities that there are, I think, at this level. So looking forward to have that discussion again with you and Synechron on the 3rd of December.
Right. Thank you.
For everyone who... Sorry.
No, I was saying thank you and have a good day, Don. Yeah.
Thank you. And same to you. And also for everyone who was listening, thank you very much for tuning in. Spread the word and read the newsletter every Friday afternoon. Looking forward to see you next week. Enjoy your weekend. Bye-bye.
Bye-bye.